Hello everybody and welcome back. In today's video, we discuss stock, commodity and crypto markets right now, including the key levels that you need to be watching over the next 24 hours into the next few weeks. Well, we rallied off record inflation. That's right, inflation hit 40-year highs, and then all of a sudden we sold that area. We suspected in the previous video we might see a rally off this zone, and we also thought that the market would sell the rip. But what happens next might surprise us. Let's talk about that right now. See you soon. Well, welcome back everybody to, of course, our market recap daily show here for the close, the 12th of April 2022. So as we mentioned, we have record high CPI, 8.5% from a year ago, the most since 1981, and the reading was another 1.2%. Now this actually came in around expectation, but under some of the economists' figures. It's funny how economists often get this wrong. The market subsequently jumped up, found resistance and sold off that resistance straight back down to support. So we have some great levels here to be looking at over the next 24 hours. When we're talking about how it all looks and which is the most important, look, it's clearly through everything, but specifically it's through food and beverages, as well as, of course, the energy market, used cars, all of these types of things. Everything's increasing. It's not good, and it certainly stunts the US economy because, of course, the Fed is forced to raise rates, or we think they're forced to raise rates many times to potentially combat that. That's the story of the next really 2 years, and we'll be talking about this a lot on the show as we go. We already have been for a while. Now, we're in a very important time because what this caused was a massive rally and then a sell-off. We saw energy perform well. Now, a lot of people don't know that energy is correlated heavily with inflation, so obviously commodities tend to do well over this period. We saw good inflation. That's actually what ended up being the best sector of the day. Let's actually break it down here. Markets rallied into the open. The market information came out an hour early. It then rallied up, got a lot of retailers in at the resistances, and then sold off all the way into the close. Small rally at the end though, which is, I guess, a little bit helpful. At least it stabilized there at the end. Talking about sectors, as we mentioned, energy, metals and mining, the two that do well off inflation, they were doing well. Some of the other culprits here, gold, utilities, and then surprisingly, consumer discretionary came out of nowhere, 0.22% up over the period. What was doing poorly? Financials ahead of earnings. So we're going to talk about that a little bit because we have said that financials are the focus this week in terms of sectors. We'll go through that very, very soon. So how does this week generally trade? That is going into Easter. Well, this is the statistical facts that have happened over time. The S&P 500 index average daily returns around Easter. And you'll notice that the day before, that is Good Friday, tends to be a ripper day here on average for markets. It's actually been better over the last kind of 20 years, 30 years that it has before that. So something we might be watching. Good Friday +1, that is the Monday afterwards, not so good. And then it has another rip day. So we've got technically two incredibly bullish days on record that are coming up. Interesting. When we compare that to this chart here, you'll notice that yes, we do have usually quite a good day for the Nasdaq actually on the Wednesday. The Nasdaq has been up 20 of the last 21 days before Good Friday. And then the expiration day of the options, that is the Thursday here, we generally have another relatively statistically good day with a bigger gain. So we're going into two theoretical bullish days here in the markets. Let's now talk about the new paradigm or where we might be. So a lot of people, especially bears, are discussing this idea that we've just had a bull trap rally, the return to normal, everything's all good, don't worry here, obviously going during the seasonal month of April, and that we're going to make a new low. And I'm here to tell you a new low would be pretty diabolical to markets. If we make a new low, that is go below what we had in February and March, we probably will go towards the weekly 200 SMA. That's a statistical thing that usually does occur. We'll be watching that together, but at this stage, it hasn't happened yet. It's kind of like the do or die for the bulls at this stage. Why? Because again of this chart. We know that there's some instability sometimes at the start of April into the mid, and we were hoping for that run into maybe the tech earnings, that is later on in the month, and then the sell-off. This is all the midterm election years. And again, if you haven't been watching, midterm election years tend to be a trader's year. very unstable in the markets, up, down, and all around, and a lot of very large volatility. We also do have the kickoff of really big earnings here. So the first company to come out is JP Morgan. We'll take a look at that a little bit later. Yes, the banks are coming out, and some of the banks don't look so good. So it depends on how they report to maybe how the market ends up reacting. We've got JP, we've got Wells Fargo, Goldman Sachs, Citi, Morgan Stanley, just to name a few, and they're kicking off earnings season. So remember, looking at the financials is going to be very important this week, and we will do so in today's video. The VIX, the fear index, rose a little bit. It dropped after the rally, and then it rose back up. At this stage of recording, it's slightly down a little bit further, but it's not really giving us any clear indication of what's going on. It's just looking a little bit bullish at this point. PCC put call ratio, not giving us much. There's a pretty big balance between the amount of calls and puts in the market. We will look at max pain a little bit later, and then we'll move over to the US 10-year. So this continues to move up. Obviously, the higher the US 10-year goes, theoretically, the worse the inflation is, and the more that the Fed potentially has to hike. Obviously, US 2-year as well is very important. So this is good. At least it's far away from the US 2-year at the moment, which is 2.4. They're not inverting anymore, but still very high rates here in comparison to where the Fed currently is. What are some of the things that have done well in the last 24 hours? Well, we've been bullish here for a few days on gold. Now, gold versus obviously the US dollar has been breaking out and doing very, very well. If we actually look though at something like gold versus the yen, that actually has been the better trade. And this is where, if you understand comparatively what's strong, that is, in this case, you're thinking gold is strong and the yen is one of the weakest currencies, this is actually the better trade to be in rather than gold. We've talked about this a lot. It's something that I teach in mentoring and I talk about a lot. But realistically, long, short style trades are some of the best when you know or you have an idea of what's occurring. And of course, you can tell here on the chart, it's way better than this one. But gold still looks much better. It's broken out from the low and it looks like it's moving towards that 61.8, 78.6 fib, which is where we hope gold can achieve, and it does look better at this stage. Let's move over to commodities. Yes, oil broke through our key level here as well. Nice downward trend. You'll notice this very, very soon when we start looking at something else. Nice support, nice resistance, beautiful support, 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 resistance, 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 a breakout. If it does come back, do we think there's going to be some buying pressure there? It does look likely, and oil is currently a little bit more clear than it was over the last 24 hours. Let's take a look at the daily here. Nice daily breakout, good bullish wicks. Obviously, it's hit a little resistance, but overall looks better than it did really at any point over the last 2 or 3 weeks. Let's move over now to Tesla. So Tesla struggled. It rallied, closed the gap at 1,022, which is where we pretty much had it. It did went a little bit under actually the zone that we'd hoped for. So it's like right on the gap itself, right there. So it just closed the gap and then sold off. Now, we did suspect that any rip, at least initial rip, would be met by a sell-off. That is, they would sell the rips. The sentiment has turned a bit bearish here on markets, and the bulls are going to have to now work to get it through, and that will become clearer soon. If Tesla does end up weakening, where do we suspect it might go to? Well, that's that 940, 950 zone. And that's going to make a lot of sense to things like, of course, the options open interest. If you think about it, there's a decent amount of puts sitting at 950. There's a decent amount of puts sitting at 1100. And there's mostly a pretty decent balance in between that zone. So any close between 1100 and 950 would be very good for options makers on Tesla this week. And we know a lot of retail love trading options, and therefore in Tesla, it's a good thing for them to take advantage of. It doesn't help us too much, but we do have a good level of support and obviously a big level of resistance should either be met. Right around 1,000 seems to be just like the middle zone. Let's now talk about financials. So we bought this sector up and we were talking about the potential here for this sector to go bullish. That is for financials to turn around and do what they're meant to do during higher inflation periods, which is potentially US 10-year goes up, we see financials go up. This time is different in some ways, and I understand that. And we haven't broken through our downward trend, but this is certainly something where you're starting to look at this sector and say, well, will it do it in the future? Now, when you start looking at some of the companies, it makes sense why you've got to be careful here. This is JP Morgan. It's about to release its earnings. At this stage, you have a low, you have another support, and if you break through, Because remember, at this stage, it kind of looks like a Wyckoff distribution, yeah? Breakdown, possible SOS. So if you break through the top end here and break through the resistance after earnings, will that be bullish towards the sector? I would argue it probably is bullish towards the sector. At the moment, this doesn't look healthy. It can change. That's something that you've got to be considering when you're looking at markets. JP Morgan into Goldman Sachs. What's Goldman Sachs look like? Actually broken down a little bit weaker than the others. Again, downward trend line through all of these markets. So if the earnings is good, we don't know if it is going to be or not. You can speculate all you want, but we don't really know. If it is good, we're looking for it to break past these points of resistance, get out of this downward trend and start to improve. And that's what sector rotation is partially about. We're looking for improvement there, looking for money flow into those areas. And if you want to really understand the market, you've got to consider those things. Remember, at the moment, one of the things we looked at the start of the year, Jets, it didn't break through, but certainly it's coming back. Maybe we will see the recovery trade come back on. Jets is often seen as the recovery trade, I guess, sector of choice to figure it out. Let's talk about Apple here. We've got a long leg doji. Interesting. Long leg doji, indecision. Doesn't really give us much information. And it's just another day of indecision here for one of the biggest stock in the market. If we go bullish off this point, I would suspect certain other things are going to happen on the S&P 500 and Nasdaq. We'll take a look at soon. And that would be a bullish sign for Apple, the first one in all of this calamity all the way down. I think it's neutral. If you're going to be more bearish or bullish on the market at the moment, you would have a bearish tinge purely because, as we mentioned, it's going to be tough for the buyers. They've got to constantly deal with the sell the rip kind of brigade that's going to come out in the markets. Bullish close above here, certainly good. Bearish close below there. I think at that point, the S&P 500 is failing its support as well. So we'll check that out soon. The DAX is similar. Long leg doji created here right around that 14,000 zone. We've discussed the resistance becoming support. We've discussed the weekly and the weakness that's here. And we've also talked about how big a level for the bulls if they were able to make it through that 14,320 zone. That would be a big thing. Coiling here, long leg doji, bullish close, bam. That would be huge. For the bears, obviously getting it back below here, all of a sudden, we're in uncharted territory to a degree. Big fall could occur. Same thing in IWM. Look at the weekly, pretty nasty stuff. If we go down to the daily, the small caps here, they rallied, found resistance on the previous resistance zone that we've got left, and then sold straight off. Not looking so positive. It really requires a big bullish candle to reverse something like this. And at this stage, if you're looking at the price action, you're hard pressed to find the bullish reasons in this one just yet. And that's why you've got to be patient. Sometimes being patient and not making a decision when things are unclear can be the best course of action. The Nasdaq, the QQQ here, again, very unclear. Tries to rally, doesn't even really fill the gap. That's just how weak this market rally can be, and then sells off. But I'll explain why. And I think a lot of it's got to do with this. So this is the futures market for the Nasdaq. What you'll notice is you have a peak. You've obviously made a trough. You've made a peak again. At that point, you can draw this line. And in our private stream that I was doing, I had this at the end. And I said, oh, wow, we've rallied. Before the market, we pretty much rallied straight into that resistance. Became a critical point for the session. And it's going to become a critical point again. Again, at the time of this recording, we've got to rally. Do we rally, break this downward trend, rally into the 14,250 zone, and then breach that? Now, everyone will know. You're screaming at the screen, guys. You're going to say, it's a double bottom, Tom. It's a double bottom. Yes, that would create a double bottom. And that would be a very bullish recovery sign. That would be where the bulls win. They then move towards the next level of participation, which would be around that 14,600 zone. And that would be highly likely should you be able to get through these areas. Again, that would be the first sign that April rally is actually going to continue. They're feeling good. Things are looking good, and it's all great. Risk is back on. Why is it such an important level? I don't think it takes a rocket scientist to figure this out. Look at the daily here. It's come right back down to where the previous resistance was. It looks horrible on the daily. Don't get me wrong. Doesn't look so good, but we might have a reverse hanging man here should we be able to, of course, get through that zone. So the bulls, it's critical they push it up. It's critical they break that level and they get some sentiment back, because this right now, coupled with the weekly, Even if it's a bullish week historically, historical data doesn't necessarily mean it's going to happen again. Look at this. My goodness, it's not good. So it needs to do some reversal over the next couple of days. Luckily, the data stats technically are there. Let's go over to the US 500. 4,400. Look at this thing holding itself. Again, downward trend. Again, double bottom potential. Again, previous support, resistance. You can see it. It's not tough. It's not rocket science. It's pretty big levels, very big levels. Resistances across here. Support being found. Currently selling the rips. Can the rip continue through? Next time, it won't be so easy for the bears to win it, but that's probably why it's come back down. The rip happened, and there was just way too many people scared saying, you know what, I'm going to take profit. This is great. Let's sell that baby back down. Did hit it. And then now in the current futures market, it's trying to rally back through. Let's talk about some of the reasons why it might try to rally back through. Here is the max pain for the 13th of April. That is all of the options combined premium. If Wall Street was to make the best amount of money they could out of all of our options and everyone's options, they would close the market on the next session at 445. Currently, the market is below that level or zone. Interesting. Let's talk about the 14th. The market then moves to a 447. So should the stats, which are technically bullish for the next couple of sessions, hold up, are we going to move towards 447 and get max pain? It's been 2 weeks now, 2 weeks where we've hit max pain almost to the T. That doesn't mean it always happens. Don't rely on that, but it certainly is something there. Let's take a look at the options interest by strike here, guys. Wow, check this out. Okay, so lots of weird puts, but a considerable amount of calls right just above that 445. So we're moving into that 447, 450 area. Interesting. So again, it would be best priced for the market to close above 440 for the week, but below 447. That would be their perfect kind of close. They'd be like, oh yes, I've made a lot of lobster lunches. I'm ready to go out on the town. We're feeling good. Let's move over to Bitcoin. Well, Bitcoin's struggling because it's relying, I think, a lot on the market to try to pull it through. Some people will disagree with me, but at this stage, crypto is really kind of like a risk on, risk off asset at the moment. It's holding its little line. It's saying, please hold up. And at this stage, it is. What are the things working against Bitcoin? Of course, we do have a rise in shorts from the big whales, something we do look at, not a positive sign there. And then we move over to Ethereum. It's moving on to support, obviously holding it on to dear life at this point. It's just trying to hold it through. And the only thing we do know is that still Ethereum is stronger than BTC, which is the one prediction that we made a few weeks ago. And it's been really holding strong there. Ethereum has had rotation into it, and it is currently holding better than BTC. Does that help us? Well, if you're in the ratio trade, yes, it does. If you're not, then all you know is that currently money is in these markets. Of course, Bitcoin's on critical, Ethereum's on critical, the stock market's on critical, oil's broken out, gold's obviously moving, different markets are doing different things. But in general, most stocks you look at will be on critical support. And it makes sense because that's where the market is. And I'm sure most of you know that, but that's exactly where we're at. If you haven't already, come and follow us at FX Evolution on Twitter. Hope you've been enjoying the videos. Definitely does help us out. We're almost at 5,000 followers here, so thanks so much. And remember, there is always more information coming out. So we had the core CPI. The CPI came out 1.2 on most people's expectations. Interesting. They got it mostly correct, except for a few of them were way higher. And that's, I think, where the surprise was. There's a whole bunch of information coming out from monetary policy from all these different places. We've got PPI now coming out 1 hour before the market. We've got JP Morgan's release. That will be an interesting one. See how they go. Big deal. ECB press conference as well, Thursday, April 14th. I mean, more information. And then we go into Good Friday. So will all these things hold? Retail sales, lots of information. Usually we don't care about this so much at the moment. Every little bit of information is critical to the markets because we see knee-jerk reactions by the stupid algorithms out there that push it around. So be careful out there, guys. If it's unclear to you, of course, maybe it's best just to take a step back, woosah a little bit, and then relax. We've shown some key levels here today. I think there's a clear case for bulls and bears, and that's the problem. Obviously, we want to try to get clarity in our situation. And if you enjoyed today's video, please subscribe, smash that like button, and we'll see you in the next one. Bye for now.